Hello and welcome as we head into Sunday, the 12th day of February 2017. My name is Derek and welcome to the Bitcoin charts for today, the daily chart as well. Take a look at the weekly time frame for Bitcoin as the train ride will continue. I'd like to thank those whom have helped within some Bitcoin gratuities, much appreciated. And let's get this ride going. Talk about this daily chart, which has this uptrend line. I'm going to talk more about that within the weekly chart because this trend line spans well back below the 5,600 handle and well before the September 16th time frame. But it's obviously in that uptrend. The selling move didn't really do too much after the 1100 level. One would think had a good chance of selling off. And sure, it did, but only to such because it's rebounded currently close to these previous highs. After the break above this band, it made this high and it has now come back towards such. So even though it pierced below it, it pierced to a more likely, more strong support mark, which was previous resistance, and is now regaining the uptrend line on the uptrend rate that it was at this point, as we can see within this band. So we look at probability odds. I see price action roughly close to the middle of this range. So in that sense, it's neutral, but you ask yourself, which is likely to be tested first? Which is likely to be broken and taken out next? And I think the answer would be towards the upside, as it has been running to the north, we'll say, or up. We've got this high, which is, well, we don't even know the previous high looking at this time frame, but it made an obvious higher low. So usually you're going to make higher highs when you're in that area, and the next time you test 1100 reduces the likelihood of resistance or substantial sized resistance levels. So let's move this on further to the weekly chart, which spans back to 2014, or with 150 periods, it's almost 3 years. And I'll go over that trend line in a little bit, but before I do such, I want to talk about Fibonacci and how this thing is moving from this 18 average band. For resistance hits the band, and every time it leaves the band, notice what it's doing within this market. You leave it here, you leave it in here, you leave it here, you're leaving it in here, and we're leaving it now. And each time it is left, with the exception of this one making a matching high, higher high. So it's not guaranteed to make one, but it probably should. And when you're trying to figure out where resistance may come in at, I'm going to use a thing called Fibonacci upside, which takes the high level, dividing it by the low, which is this range in here, 310 and 193, and to put it to the power of the next key Fibonacci points, which are these percentages you can see on the screen. The first mark represents around 416, which was obvious resistance, with the first test being a small pierce above. Number 2, resistance again in at 669, and then on the break of it, and the next one in at 1441, which would be new all-time highs by over 300. And this is within the BTC exchange. So with a lot of them, you're pretty much adding 10 or 20 on top of it. And I'm using a high of 1100. So if you're using a high of 1130, you add 30 to these numbers, plain and simple. Or you find the numbers yourself for the high that you have for this level and this level. You calculate it, and You can see, but for the most part, you're like, okay, where's a good eyeball test? And you can see in here that it looks like the most logical spot would be a pierce above. I would think 15 to 16 is where I think it would pull back. And because every single time it has broken this key resistance level, it has come back pretty much exactly where it did before. Then the most likely scenario is a move up here to push back here. That's the best bet, or what I'd be thinking has the most probability over other similar events like going down versus going up, etc. So what we're going to do now is I'm going to talk quickly about these Fibonacci upside. Each level is harder than the next one. So when you go from 310 to 415, that's about 100 higher. That's 33%. To go from 415 to 668, that's about 250 higher on 415. So now you're talking over 50%. And this move to this move is already over 100%. So it's going to work at the next way because the one after that's over 3,000. So you're going to start to talk about having the gains to be harder and harder. That's why it's like a video game. The levels early on are easy and they get harder and harder. And it's so difficult to even with these markets to go to like these insane levels. And some of the insane levels would be 5,000 and then 37,000. Those will be called insane levels. It was insane to go from the abyss to where we are now. So I don't know how or where the ceiling for insanity is going to be met at, especially because we're a long ways away from this thing being in a bubble situation, because it's more and more stores are accepting Bitcoin kind of deal, and it's more and more popular, but it ain't that popular overall. Not that much. It's popular, but not that popular, meaning it needs to get a lot more popular for the bubble phase to kick in, I think. There is a trend line, which I'm going to connect with this low. Now, what I like about this trend line is it comes close to hitting this level, but not really. But it does hit this perfectly. Hits here perfectly, so that's another part. And it hits here perfectly with that pierce below here. So it's a very legitimate trend line, but since what I find interesting is, I can't draw the straightest of line, but resistance is now being support amongst the trend. So that's a little bit of strength, not much, but a little bit. And when I draw a parallel line within this one, which is the exact same rate of ascent, each time resistance has had a blow off top. A blow off top is when it comes to it and it sells a lot of it off fast. You can see it here. This green candle goes down here, and then this is an obvious one in here. If you ever get into the situation where it doesn't have a blow off top and something like this, a trend line that has had constant support, constant resistance on several occasions, which is the case here, making it a very good, valid trend line, then I would look for a move with the exact same rate of ascent from resistance, meaning right now the bottom of this is around 780 and the top would be about 1230. So that's a difference of 450 or so on 780. That's about 50%. It's a 50% range. So 50% on that gets you really up to about here. If it's going to have a big break above it, and then sometimes you just get a big pierce move, meaning, and I can actually draw colors on this, which is cool. So I'm going to change it to a green color, but let's just assume it has something like this. And that's how it looks at one point. So instead of going up here, what might happen is it blows off that back down to another level, And then you'll get a look of like this where you have the line, and it would be again just a blow off top, and then the trend would resume within this rate. That's another thing that wouldn't surprise me if a situation like that were to come, because the likelihood of a break of this resistance and things to go haywire is not that likely, but it's possible. And as far as this trend line is concerned, another thing that's worth noting is it's in the middle of this range right now, of the trend line range. So therefore, it's no sign of anything to be overbought. Correctionary phase can still happen. It's well above this 18 average. But what has not happened on this chart is after it leaves this 18 average, is for it to have a small gain, come back to it, and then keep going higher. Rather, every single time it breaks from it, it has hit this point and then come back. And it's been 3-4 times, but it's more common when you're in this type of bull market in a spot like this to go up over down, meaning in 100 situations, you're probably more than 60-70 times more likely to have it work bullish within this spot. So that will be the conclusion of the video, and take care.